Thank you so much for joining us on the best stock market podcast in the entire YouTube history. My name's Warren.
And I'm Buffett.
Let's jump right in. So, in our first segment, we'd like to talk about what happened last week in the stock market.
No, we'd like to talk about our stock picks last
Oh,
week.
yeah, stock picks last week.
Someone's
Okay.
a little confused. Okay.
Yeah, good point. So, my stock pick last week beat his stock pick again.
This does not count. They were both down 6%. It was like 0.3 that he beat me by, so don't count that as a win.
It counts. A win is a win. Doesn't really matter. Anyway, my stock pick was Dollar General, and it had earnings, and it fell overall just because the market was falling. And I kind of feel like that was the same for it.
Yeah, so I had Rubrik down a little over 6.5%, and Rubrik also had earnings this week, but Rubrik actually smashed the quarter. They beat on every single metric and raised guidance everywhere. So they really reported an amazing quarter. It wasn't like, oh my god, like it's up like 50% the next day, but it was really an amazing quarter. But on the other hand, in the past 2 months, I think they've doubled their stock price. They were trading like 45. They ran all the way up to 80. So it was like it was inevitable that the stock price takes like a breather. And the market in general was really weak this week, especially today on Friday. But yeah.
So what happened last week? Well, in this today and this past week. Ultimately, I think the biggest thing that happened is just that there's a little bit of a sell-off towards the end of the week. There's a little bit of sell-off towards the end of the week from different fears and speculations over AI. And I think this was mainly triggered yesterday or 2 days ago from the Avgo report.
Yeah. So the two big earnings this past week were Broadcom and CrowdStrike. And so the big one was Broadcom actually missed or like barely beat on revenue, and the big thing is
on guidance.
And they didn't raise guidance, which was a big thing, and everyone got worried that like, oh my gosh, is the AI
But it's only one company, like what?
Yeah, it's one company, and it's not like they lowered their guidance, they just didn't raise it.
Yeah, it's annoying being an investor and having the feeling where like, if it's not raised, people think it's lower. Like it's not really how it works.
I know, but to be fair, the stock has run up. I think it was up like 50% year to date. So like, but then like, there's also an element. I think one of the big reasons that the market fell today specifically is this Friday morning the jobs report came out, and the jobs report actually blew past expectations. They're expecting like a little over 100,000. They came in with like 175,000.
Imagine how much worse it could have been if we had hit 100,000. And keep in mind, I'm saying the jobs report came in as 175,000 jobs added.
Yeah.
Imagine if it said only 100,000 were added.
I actually think
the stock market would have been doing so much worse.
I actually think that's where you're wrong. Well, not really, but kind of. See, one of the reasons the market was today, Friday, the market has done horrible. Qs are down like close to 5%, S&P down like 3%. Everything's blood red, unless you're in like some like healthcare or like retail or whatever.
Or your inputs.
Yeah. But the reason why I think the jobs report actually coming in way stronger than expected led all the markets to be down today is because we know there's decently high inflation now because of like oil and Iran, the whole thing. So you'd want the Fed's gonna want to hike rates basically because they want to lower inflation, and the reason the Fed wouldn't hike rates is because jobs are weak. But if jobs are strong, that allows for the Fed to raise rates. And the reason that like I think it actually might have not been so bad if jobs actually did worse, because that means they can't cut rates. It wouldn't be good for the economy. But that means they can't hike rates. And because all these AI companies are taking out tons of debt now, like this past week, Google announced they're taking out $80 billion of debt. That's bigger than the SpaceX IPO. The SpaceX IPO is planning to raise $75 billion. Google's raising $80 billion
That's
worth
not
of
their
debt this past
valuation,
week.
though.
No, but
Yeah.
when SpaceX is raising $75 billion, Google's raising $80 billion in bonds this past week. And so when the Fed raises rates, even by a tiny bit, that makes all these hyper growth companies have to like totally readjust. They gotta pay up more, and it really does not.
It hurts the economy.
It hurts the economy, but it also helps inflation come back down. But it's also gonna hurt, and that's how we.
It's a balance.
Yeah, it's the balance of the Fed, and we can also see like we saw that like in midterm years there is usually a correction in the market, and so this could be the start of the correction. Who knows? So let's get into what's happening next week in the market. So let's just start off with the elephant in the room. We got SpaceX IPO this week. This Friday.
It's a big elephant. That's a big boy.
Alright, bro. So this week, SpaceX is hitting an IPO. It's going to be insane. This is the biggest IPO of all time. Raising $75 billion. Valuation $1.75 trillion. This is about to be absolutely nuts. I have all my friends calling me up saying they're buying SpaceX IPO, like buying like $1,000. Like, this is insane stuff. And I really think it's super insanely overvalued. The valuation just doesn't make sense. Morgan Stanley came out today and they said they see SpaceX hitting $3 trillion of revenue in 15 years. I'm like, who? You can't forecast 15 years. You can't forecast till 2040, bro. Like, that's not how it works. So I really
also,
think
hitting $3 trillion in revenue, that's insane. Like, right now, NVIDIA's market cap is $6 trillion, okay? They don't have $3 trillion in revenue every year. That's insane to think about.
Yeah, the biggest revenue companies like Walmart and Amazon are making like $1 trillion in revenue. And like they're saying they need just for perspective, right now they're making, I think it's like close to $20 billion a year. They're saying it needs to legit like 100 extra revenues in 50 years.
More.
A little more than like 158 times the revenue.
But also there's going to be an Apple conference this week, like a
WWDC, Worldwide Developer Conference. And what's it called? So that's a big event for Apple. That's where like they'll release all their new products and they'll talk about their upcoming things. It's going to be really interesting because this is the new CEO. Tim Cook's not going to be doing it, I'm pretty sure. So it'll definitely be interesting to see. We also do have the big earnings this week are Oracle and Adobe. So
earnings season's pretty much coming to an end. It was a good run.
Yeah, well, so I'll be interested to see Adobe because like they're one that's like the software companies that like this one might actually be disrupted by AI.
I mean, also Oracle's important. Just in
general. Because Oracle's dual. It's really interesting because half their business is software. That's like what they were known for doing. But in the past years, they've been trying to build out these huge data centers and everything. So it'll be interesting to see how Oracle's been played out, especially with their massive, massive debt that they have. So that'll definitely be interesting to see. But yeah.
More interestingly, my stock pick will be, drumroll please.
Oh no, this segment is the best segment of the podcast. Stock picks.
My stock, I don't know what the point was that, but my stock pick will be Hewlett Packard. And
Enterprise.
I think the ticker is HPE. And I recently saw on Yahoo that it went up a lot because of on earnings, but I actually don't like that it went up on earnings. I think it's a little bit overvalued now. But in the long term, in times where you don't know what's gonna happen in the stock market and everything's very unexpected, there's stocks that are like very safe and secure, and I think one of these are like Coca-Cola and Hewlett Packard and Enterprise. So that's my pick.
Interesting pick because they are now like more of a computer server company. So I don't know how stable it is now, but my stock pick, this is gonna be a one of a kind stock pick right now. Not even a stock. I'm going Ethereum. This is the crypto ETH. And so the reason I'm picking this now is I know we love to say the stock picks are, tell me how they perform this week.
It is though.
This is going to be a pick that I'm having for like multi-years out.
No.
If you're thinking 1-2 years out, Ethereum could be huge. Because if you think about it, there's this huge theme of tokenization. Where you, like, for now, like, if I want to buy real estate, I need to go buy out an entire property. But if I can make that tokenized, maybe I can only own 1% of the property and share with and I trade it like a stock.
I don't like that.
And
I don't like
Ethereum's the platform in which
like things like that
enables all that. And so that's a huge, huge market. Like, people like BlackRock, JP Morgan are saying tokenization is the future of finance. And so I really think Ethereum's the platform where that all can definitely play out.
Thank you so much for joining us on this week's episode of the podcast, Next Gen Investors.